Joining us now, we've got James Demmert, founder and chief investment officer at Main Street Research. James, thank you so much for joining us. All right, so we're going to talk telecoms. AT&T in particular, they're the latest to report. They beat on revenue, adjusted EPS 51 cents a share, so that was in line with expectation. But postpaid numbers, those look really good. 324,000. Looks like they stole some customers from Verizon. But what's your take overall on how AT&T performed?
Yeah, they checked all the boxes.
Yeah.
I mean, this is somewhat of an ignored company. I think it's one that people weren't really paying attention to, but they checked all the boxes. The revenue numbers were great. The subscription numbers were really awesome. I think people really needed to see that beat, and that's helpful. And keep in mind, they're selling off the divisions that really aren't those growth places, right? DirecTV and Warner. And I think that goes back to the balance sheet, which now looks better. And they announced this really important change, Stansky did, which is they're going to start buying back shares. They have not been able to do that for a long time.
Which was also earlier than expected, them doing that move. So it just shows that they have the cash to be able to do that. They have the confidence to be able to do that. And what's interesting to note, to your point about, kind of undercovered, because so often our attention is focused on Mag 7 and how they've performed, which has really been lackluster this year. But I just looked at the year to date for AT&T. Oh my gosh, talk about outperformance, especially compared to the S&P 500.
Yeah, up 18% for the year, right? So something that hasn't been really paid attention to. This is where I think investors really want to focus. We have obviously an uncertain world, and at Main Street, what we're looking for is companies that have consistent growth, that are somewhat tariff immune, and that's where AT&T comes in. Right? And it's also going to ride the wave of AI and this giant networking digital transformation we're going through. So I love the telecom space, and AT&T is a great way to play it. And if I was an investor and I owned the stock, I'd hold it. If I didn't, I'd think about buying it.
Okay. But tell me your thoughts overall on the sector, because I know you actually like T-Mobile better than AT&T. Why do you like them better?
Well, T-Mobile, one thing it doesn't have that AT&T does is a tremendous amount of debt. That's been one of the problems for AT&T, and they still are in the wireline business, where a T-Mobile, or I would also look at Deutsche Telekom. We're global. I think that's very important, and Deutsche Telekom kind of works within its own borders, avoiding tariff. Again, I think really important for investors. So the balance sheets there at T-Mobile, Deutsche Telekom, a little cleaner. They don't have that old line business. All of them are trading at 12, 13 times earnings. So I think throw a dart. These are all great stocks.
Okay, so it's not it's because it doesn't have part of this story there, it doesn't have the old school Ma Bell effect there. But let me ask you then, expectations for T-Mobile, they're up next. They report tomorrow. What are you looking to hear from them?
We're looking to hear very much the same thing. I mean, they are the dominant wireless provider in the world. They bought Sprint years ago. That momentum has continued to have them meet or beat expectations. We expect the same as they report. I'm very interested in the call. I want to see how they're getting through some of these concerns about volatility. But I do, again, I think these companies are insulated from tariffs, hence why AT&T, T-Mobile, Deutsche Telekom, all up for the year.
And then let me ask you your thoughts on Verizon. Even though they beat expectations, a lot of attention was paid to the postpaid subscribers, where they lost some customers. And it has underperformed compared to T-Mobile, AT&T year to date, still outperforming the S&P 500 though. Do you share similar concerns, and does that reaction to the postpaid subscriber loss make sense to you?
It does make sense. This is a horse race. There's only a handful of horses, and they're last, and they've been last quarter after quarter. At Main Street, what we're trying to look for are the best company in a sector with the consistent earnings, and this is just not the one that would be our pick.
Do you think it's because of also the loss of subscribers? They're notoriously known as the more expensive one. Customers tend to stay with them and be pretty loyal, but if we're in a climate where there's some deteriorating economic conditions, consumer sentiment has been weakening, that consumers are just looking for a better choice and better costs.
It's definitely that. You've got consumers a little wobbly on the spending, but also they're going against T-Mobile and even AT&T, which are tremendous marketing machines. and they're good at taking customers. And I think Verizon's just going to be the whipping boy through this one.
They're going to need a new "Can you hear me now" ad campaign,
there
something
you go.
like that.
Love it.
All right, James, thank you so much. That's James Demmert, founder of Main Street Capital and Main Street Research, and Chief Investment Officer.